Welcome back to my more report analysis videos on Tuesday the 17th of October with me, Richard Perry, market analyst at Hantec Markets. I look at euro dollar now, which is now starting to fall back again. I'm going to have to start thinking that this could even turn into a big head and shoulders top pattern. We've had this smaller head and shoulders top pattern that completed below 1820. But could this turn into a bigger one? 1660 now dropping back. Move below 1660 would complete that. And you look at the momentum indicators dropping away and failing on the MACD lines, failing on the stochastics, and the RSI dropping below 50 is not all that great. Certainly with this sort of developing decline now back on the euro dollar. I showed you that chart on the main analysis, which was this one here, which is the spread under 10 bund spread under 10-year Treasury, and you can see the big breakdown. That's at levels not seen since June, and there is a positive correlation on this on these two charts. So it does suggest that pressure could still drive to the downside. Technically speaking, we're sort of beginning to rack up these negative candles, aren't we? We're pulling away from that 1820 neckline. As I said, momentum indicators deteriorating. It looks like the next support is that 38.2% fib level of 1735, but there's an old sort of level at 1711, which actually comes in at 1715. 1711, 1712. 1715 as a reaction low from earlier in October, but yeah, we could see a sort of drop below there. You can see in this last few days we're sort of developing this run of lower highs, lower lows, momentum indicators, and more negatively configured RSI failing below 60. Even 50 is a struggle. MACD lines failing underneath neutral. Stochastics going consistently negative, failing around that sort of 70-80 mark. So these are all sort of more corrective signals. You've got the moving averages rolling over, providing a basis of resistance now. And you're sort of breaking below supports. 1780 you could argue is a very minor resistance initially, but generally speaking you'd go for sort of today's high, which is 18 figure. 1820 is that neckline that came in to provide resistance yesterday. 1818 was the high. So it certainly looks as though the market is turning more corrective, I think, on euro dollar. Again, it's not sort of boding all especially well. That massive support 1660 is, I mean, I've said this on time again in the last couple of weeks, 3 weeks, is a big level that the market now is, I think, possibly going to sort of gravitate towards, in the sort of in the fact that this is a range play that could turn out to a big top. So breaking underneath 1820 is negative, and could see a continued move to the downside towards 1660 in due course. So I wish you good luck in your trading, and I'll speak to you later. Thank you.